What's going on, everyone? My name is Nicholas Merton here from Datadash, and today is March 10th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we have to talk about how yesterday something broke. I'm not here today to just tell you guys about the decline in Bitcoin and explain why we're seeing this further downtrend, but we need to step into the macro perspective. Bank stocks have been plummeting over the past few days, and it likely signals that there's something breaking in the economy, that the Fed's tightening is finally having its effect in order to cool inflation and bring demand back in equilibrium with supply. We've got to talk about a lot of things throughout this video. It is going to be a jam-packed episode. We'll also have a sponsored review of ZoidPay later on towards the end of the video, so stay tuned for that. You guys won't want to miss it. Let's go ahead and kick things off. So I want to go ahead and really start off here with Bitcoin, because I understand it's what's most relevant to you guys. A lot of you are wondering whether or not this was the start of a new bull market, and as we have been shouting through the roof for the past couple of months, we do not believe this is another bull market. This is another bull trap, one of many that we will have in this extended bear market due to the weighted macro environment. And it really isn't that difficult, guys. We came back up to the same range. We faced resistance in August. Here in the month of February, we had the Fed come out confidently and state to the markets that it's still tightening, that the job is not done, and inflation is still elevated. And while a lot of people chose to ignore that and chose to jump the gun and wait until this upper band of resistance was turned into support, unfortunately, investors got trapped in a slow but steady liquidity trap, both in crypto and in equities. We wrote about it in the Dash report back in February, and we've been talking about it here on the channel. Unfortunately, there's still too many people out there who are encouraging people to trade and invest the same way they did over the last decade. And it's not just me saying this here or just my thoughts on price. We can see it across a whole range of momentum indicators for multiple days. Even back here in February, we were already starting to get some warning signs that the trend was weakening, that it was overextended in the short term on the key momentum indicator we utilize in the Dash report. Not to mention, we also have the Lux Algo indicator, which again was showcasing what band of support we should have expected for price. And if that was breached, that we should expect lower moves. Not to mention, it gave us plenty of sell signals here for price without any continued strong confirmations or buy side signals. So again, we are seeing clear weakness in Bitcoin's price here. And if we take a look at the weekly time frame, which we'll take a look at towards the end of the video, we'll see that the longer term trend, where there's a little bit less noise, Lux Algo signals to us very clearly that nothing's changed. So if you guys are interested, I definitely recommend you guys check out Lux Algo as a tool. It's one of the few indicator suites that I actually like to utilize in my trading strategies. Prefer to use it on those longer term time frames, on the weekly time frames and the monthly. But this is where, again, you guys can start to get some valuable insights. As we've talked about for months, we've been predicting that this is another relief rally. It does not have the steam. And it's not just Bitcoin, Ethereum as well, collapsing through here after a strong sell signal here back on March 8th due to Lux Algo, dropping down from $1,580 down here towards $1,400. Not a pretty price action for one of the few assets that people are estimating is just going to hedge things because of the ETH2 upgrade, the move to proof of stake, EIP 1559, all these beneficial monetary policy elements really not helping Ethereum here, as many people expected. And as we zoom out here towards that weekly time frame, right, we have gotten no serious buy side signals during this uptrend. And on top of that, Ethereum is looking like it's doing exactly like it did back in 2018, an extended period of time before it comes back down towards its prior lows in the bear market and further collapses in price. So if you guys are interested to start utilizing Lux Algo, some of these momentum indicators that'll give you that edge in the market, I'll have a link down below in the description, a 30% discount code if you use DD30, which is our custom discount code for the channel here. But again, this is a key sign here that momentum has continued to fade, that the longer-term downtrend is still in play. And boy, when we take a look at the macro perspective, what's going on in equity markets, folks, I'm not exaggerating here, something has broken. We don't know exactly what it is yet, but we know something is going on, specifically in the financial sector and banking. Now, yesterday, The Dow Jones dropped 1.6%, the S&P 500 dropped 1.8%, and the Nasdaq dropped a respective, we're on the weekly time frame here, dropped a respective 2% yesterday. So yesterday was a pretty big down day across the board, but a lot of this is not only concentrated in the broader pool of stocks, but more specifically, it is exacerbated when we take a look at financial stocks. Now, this led to a major spike in the VIX, an 18.3% move to the upside. This is the biggest move in the VIX since back here during April of 2022. So this is not something to be tread on lightly. This is a big move in volatility and options volatility in the S&P 500, and has taken us back up towards the relative highs we had in late February or in early January. So what's going on here? Look no further than the entire industry and sector of the financial system and commercial banks. If we take a look, obviously, at one that's close to home for crypto, Silvergate, which is now officially bankrupt and bust. It will likely go down to zero at this point due to its rapid exposure to its FTX and a lot of the plays that went under during this bear market. Silvergate, which provided a ton of market-making services for the crypto industry and was a huge institutional supporter and player for the industry, is now basically kaput. It's gone. It is no longer. A major multi-billion-dollar commercial bank is now under because of its exposure to crypto. And because of Silvergate's collapse, we are already starting to see many other plays within the financial sector, those more exposed to early stage companies and investments, starting to showcase signs of contagion. We've already seen this starting to play out in Silicon Valley Bank, which is down 60% after having to do an emergency stock raise, diluting their share base in order to cover up an over $1 billion loss, $1.8 billion loss from the sale of their securities or the equities or crypto that they may own. So again, these assets on their balance sheet have left them in a major hole against their liabilities and therefore having to dilute their shares just to make sure they can survive, leaving their stock dropping 60% in value. Now, this may seem like it's something distant from the traditional financial system, that there can't be any contagion, but equity prices across some of the biggest commercial banks that are usually the defensive stocks doing quite well in this high interest rate environment, well, they're not doing so hot. JP Morgan yesterday alone dropped 5.4%, taking us down to the lowest price point we've seen since back in November, and practically within 3 simple trading days, wiping out the past 5 to 6 months of gains for these equities. An entire half of a year worth of gains, of slow uptick in price, of distribution, now coming in full swing. No longer can this just push sideways. The trend is in. Take a look at the weekly time frame here. Yikes. Almost 10% down in 1 week. The worst week for bank stocks that we've seen in practically, I think, about 3 or 4 years, right? Take a look as well at Bank of America, dropping down 6.2% yesterday. And while the daily time frame looks a bit scary, if you take a look at the weekly time frame, it's even more clear that we've got a long way down to go. Take a look as well at smaller investment managers like Charles Schwab, down over 12.7% yesterday. The biggest single day decline we've seen in Charles Schwab in a long period of time. Take a look again at that weekly time frame. I want you guys to, again, just feel it out yourself here, right? I understand I've got my perspective, my narrative I'm driving here. I want you guys to think about it for yourself. Do you feel like this is a time to buy the dip? As everyone has been telling you for multiple months now, the Fed is just going to change their inflation metrics, that the Fed can no longer hike rates anymore. Well, I don't think we're so much on the conversation of the Fed hiking rates. We're at the point of something has broken in the financial system. And this is, again, where we go from stagflation to a recession, if not depression, in both the real physical economy and asset prices. Take a look at Capital One as well, albeit faring a bit better here yesterday, only down around 4%, still well down from where it was back in early February when equities peaked. And then Blackstone, dropping 7%. This is one of the big plays that is heavily exposed to the overall real estate market, has developed a lot of the RIT, or the rental income generating property investment vehicles that allow you to earn money on basically being exposed to the real estate market in different capacities. Well, this is the same company that for months has paused withdrawals on its REIT products, something that was unheard of back about a year ago, and is signaling continued signs yet again through lower highs and lower lows that something is about to break in the real estate market. Someone is overexposed. And this is going to have a cascading effect where likely the Fed may have to step in or at least stop its tightening efforts, that the job may be done here, that the people, or I guess the quote unquote emperors who have no clothes, are going to be exposed. Not just the Sam Bankman-Frieds of crypto, but the broader players in the financial system who were also too used to the good times over the last decade. And that will have major ramifications, not just for their respective markets, but it will most certainly weigh down on crypto assets as well. Don't bet against that, guys. Don't think the crypto is completely out of the picture, that it's out of the woodworks when it comes to the correction that's going on in this space. There are still so many players who have yet to capitulate, from miners to potential exchanges who still may be saving face right now that they're all good, but in reality may have a huge hole in their balance sheet and won't be able to stomach another 30-40% decline in crypto prices. Again, we still have a lot of companies going through their bankruptcy proceedings, but take a look overall at the XLF ETF, right? This is the overall major ETF that people invest in order to get exposure to banks in the financial sector, down 6.8% this week. Most of those losses coming in yesterday, about 4%. I want you guys again to just zoom out. Let's take a look here. We'll go to the monthly time frame and take a look back as far back here as the early 2000s, really over the last 20 years. I want you to take a good look at this chart and tell me how you feel. Do you feel like, again, we're ready to just kick off the next bull market? We had enough capitulation as is. Or is the game up? And are we ready for a real bear market, a real recessionary pullback? Not the dip we got back in March of 2020, not the correction we've seen so far from 2022. I'm talking about a real bear market where we flush out all of the noise that was tolerated for the last decade, the overt exuberance and speculation that went on during an era of 0% interest rates and massive money printing. I gotta tell you guys, this chart does not look good. It does not look good to me personally. And what's even more telling that something is broken is the bond yields, which we've been talking about, right? We've been saying have been climbing up here as the Fed is going to have to likely continue tightening. That's been the trend. I got to be honest with you guys. Bond yields for the past few days, US 20-year yield, and even the shorter term maturities as well, right? US 2-year yield as well had its biggest decline here in the past couple of months. What's going on here? Well, the only reason bond yields are dropping is not for the good reasons that the Fed is going to pivot. And this is great news. No, it's starting to go down because the Fed may have done its job. And that means something has broken. And that means there are more layoffs to come. The economy is heading to recession. There is no way that bad news equals good news. I'm sorry if people have championed that to you and told you that, oh, this is great because it means the Fed's going to pivot, it's going to save the day, and equities are just going to go back up. No. It means something bad has broken, guys. I'm just trying to be as real as I can with you all. I know many of you get this, but for those of you out there who are, again, still thinking in the mindset of the last decade, you need to understand that this is a structural change in the financial system, that inflation is not some laughing matter, and it is going to have a weighing effect, as it did back in the 70s, on a decade of performance, a lost decade in the performance of asset prices. Take a look here at this recent data that we got from the jobs numbers yesterday. The overall construction jobs open on the open market dropped from around right under 500K to 248,000 jobs. Practically split in half in one single month. If that doesn't tell you something's breaking in the housing market, that construction of new properties is practically nosedived, this is incredibly scary stuff, guys. This tells me some of the large consolidated players like Blackstone know something big is happening, and they no longer can hide it. Now, we've already got enough to worry about from the macro perspective of things, but we also have a lot to worry about when it comes to crypto. Predominantly, what's going on with the Mt. Gox creditor situation. And again, I just want to go ahead and mention that today is where people can start to choose their repayment method. Now again, Mt. Gox has exposure to 141,000 Bitcoin. A lot of these people have not had access to their Bitcoin for a long period of time. And I know a lot of people will make the argument that, hey, these were cypherpunks, these were the early stage guys, they wouldn't dump Bitcoin. Just want to go ahead and put aside all the metaphorical stuff that we may preach in crypto. If you had Bitcoin around $100, $200 and you saw it go up to 60K, and then now you see it sitting around $20,000, 100x from where you originally bought it, you're not thinking about selling some of it? I mean, let's be real, guys. Like, some of these people are going to want to sell. There's no net benefit that's going to come from this. Maybe there are some buyers waiting to buy into this capitulation, some of this sell side pressure. We can maybe hope for that, but we certainly aren't seeing an existing price action right now. People aren't taking the dip at 20K. We broke through 20K this morning with no signs of optimism yet. So who's going to come and save us? The institutions aren't going to save us. Retail traders are getting their liquidity absorbed. They can only have so much impact. Who's buying it? All we have is sell side pressure, and we are going to have more sell side pressure. This is what can easily drag us back down to that lower capitulative channel. And we've been talking about this not just in regards to price action, but also in our crypto quant data science models that we track here on the channel. You guys can access our crypto quant dashboard with all of our favorite models for free. All I recommend you guys do is give a heart and a star there, and the link is down below in the description. If you guys haven't already, just bookmark it. It's a great free tool. And again, we talked about a lot of people getting overtly exuberant, right, about this short-term bump and how we have seen this happen before. We've seen these secondary waves where we come back into the blue territory yet again. And I think we have a long way to go. If we think that we're going to set in a higher low here on the net unrealized profit or loss model, which we track a lot here in the channel, I think people have got another thing coming to them. I think we need to go lower than we had in the previous bear market or two, because we've never been in a recessionary bear market for Bitcoin. We've always been in a decade of easy money. What's Bitcoin going to look like when we're engaging in quantitative tightening, when something breaks in the economy and people are no longer looking to put their money in risk-on assets like Bitcoin? I think it's going to be much worse. Not to mention, we haven't even seen a typical correction equivalent to previous bear markets. We usually always come down on our 30-day SMA for the supply in profit. So this is using unspent transaction outputs on chain. And essentially, we usually see that about 43 to 45% of market participants are within profit, meaning that the vast majority of participants are at a loss by the end of a bear market. Well, we've only come down here in this bear market by about 49%, about 50% of market participants. That likely means we've got a ways to go, even just to get in line with traditional bear market metrics. So again, I'm not too eager, not too optimistic now. This to me looks like a trap. Yet again, we've had these before in bear markets, these surges higher, similar back to what we saw back in 2014 with the collapse of Mt. Gox, where things got a lot worse before they got better. And of course, as we talked about minor capitulation, the hash rate in Bitcoin is way too high, in my opinion. We have not seen a real capitulation. There's still too many overexposed players. Some of these publicly traded companies like Riot, Hut 8 Mining, all these companies, they're losing tons of money. And eventually it's going to get to a point where they can't keep diluting their share value. The company is going to go bust at one point or another. I'm not talking about them specifically. I'm talking about some players in this industry are going to go bust eventually. Bitcoin mining cannot sustain itself like this for so long. Now, I want to go ahead and really step out into the long-term perspective before we go into our review for ZoidPay. And I want you guys to just take a look at this chart here. Just look at price action alone, right? Clearly, we got knocked down here within the supposed accumulation channel. The most optimistic scenario for Bitcoin is that this is an accumulation channel. We better hope that price is going to come down here and get some kind of bid side support around 17, 16K. That's the most optimistic scenario for Bitcoin. But I think if we look at it even further and we follow the points of resistance and support, it looks like we're coming down here towards around 14 to 13,500. And that this could potentially be a long-term descending wedge setting us up for the next bull market sometime in late 2023 to early 2024. Trust me, guys, I don't have any incentive to say these kind of things because I know that makes a lot of people feel like, man, why do I even keep up with crypto? Well, the more you guys can keep up here with this, the more we can continue day by day to talk about these setups that are slowly building up over time, right? How we have not broken through the trend here, right? How we faced resistance. Yet again, we are still on a clear downtrend for this bear market. We can see that through price action. We can see it through support and resistance. We can see it through the market order flow. We can see it through our indicators like Lux Algo. We can see it through the data science models through our partner CryptoQuant. All of these metrics are signaling to us that we've got a ways to go down. And if day by day we can continue to keep active here, 3 times a week, that's all we do here on the show, 3 videos. If you guys can continue to keep looped in, we will know when real capitulation has come in, when it's really time to dollar cost average, and most importantly, when the trend has actually shifted. And I think that we've got a lot of opportunity. If we can keep patient, preserve our capital and liquidity we built up over the last decade, and deploy it at that right moment. And for those of you who are first-time investors, for those of you who are looking to get into the markets, who have just started to learn about investing, if you can wait patiently, you are going to have one of the best entry points of your lifetime. But we have to wait until the Fed is on our side again. We got to figure out what's going to happen here in the financial system over the next couple of weeks when we've had the biggest interest rate hike in the past few decades, since back in the 70s. It's a really crazy ride, guys. I'm happy to be here with you all during this journey, and I'm really excited to see how things are going to play out. I hope we come out on top. We're going to be as best prepared as we possibly can be. I'm going to continue to be here during bull and bear markets, unlike a lot of people who just come during the good times because those are the easy times to trade. I'm going to try to help you guys make money in both directions. So if you guys are interested in supporting the channel in any way, I definitely recommend you guys check out the links down below in the description, whether it's Lux Algo, Bookmap, CryptoQuant. There's all these really great tools that can help you guys get an edge in the market. It's why I use them personally. But let's go ahead and dive into the sponsored review of ZoidPay. Alrighty, everyone. So in today's sponsored review, I want to spend some time to talk about a really exciting market leader when it comes to infrastructure for Web3 payments in DeFi. Today, we're talking about no other than ZoidPay. Now, for those of you who are hearing about ZoidPay for the first time, ZoidPay has been around as far back as 2018. And since then, they've deployed a whole range of really exciting applications and interfaces to allow end users to spend their crypto at over 150 million retailers across the globe, allowing crypto to actually be utilized in the real world for goods and services. But on top of that as well, they're aiming to think much bigger picture, not only building a super app that's going to allow for the end user to be able to do so many things that they would usually do across their banking and fintech applications, as well as their crypto wallets, all from one app, but also building a whole range of tools for businesses to integrate crypto payments into their daily lives. So we've got a lot of things to dive into. I want to talk about what ZoidPay has already done, what it's looking forward to doing in 2023 as they have a very expansive roadmap, and overall why this company should definitely be on your radar. So let's go ahead and kick things off. The first thing that I think speaks a lot of weight is not only that ZoidPay has such a range of tools, but that they've been able to get a $75 million investment commitment from Gem Digital. This is the same fund that had basically invested in one of our other long-term partners, Energy. So we're starting to see that such reputable names are putting in large amounts of investments into names like ZoidPay. And I'm really happy to see that the team has raised this, especially considering the market conditions. This is going to allow ZoidPay to continue expanding not only its runway, but also keep building on its existing products and its new product line. For example, ZoidPay already has its virtual Web3 card powered through the Visa network that allows you to spend your crypto assets at a whole range of different retailers across the globe. On top of that as well, not only do they have the virtual card, which allows you to spend up to $100,000 per month after completing KYC, but on top of that as well, they're going to have the prepaid physical card as well, allowing you to shop at physical retailers. So this solution already alone has put ZoidPay at the top comparative to a lot of different solutions across the world. But its biggest product that it's launched so far in the sense of traction has to be the ZoidPay web extension. Now, there have been a lot of different types of crypto web extensions. There are obviously crypto wallets like MetaMask that allow you to store your crypto, and there are certain types of niche applications like Lolly that allow you to earn Bitcoin on your purchases. However, ZoidPay really gets down to the core of servicing as this kind of Web3 wallet for spending your crypto. It allows you to essentially have Bitcoin, Ethereum, and a wide range of different types of crypto assets, allowing you to shop at dozens of major e-commerce retailers across the world like Amazon, getting cashback deals, some of the best rates on your crypto, and essentially allowing you to actually spend your crypto, not just being some Web3 wallet where you're interacting in the world of DeFi and trading from one asset to another. This is where it becomes real and you can spend it directly from your browser. This for me was a really exciting solution, and I haven't seen anything like this on the market. And when you pair it with the debit card, this really starts to offer a lot of powerful opportunities to spend your crypto the way you want to, and really makes crypto a bit more tangible in the physical economy. As crypto has become a multi-$100 billion asset class and was priorly an over multi-trillion dollar asset class in the previous bull run, these kind of solutions are going to become more and more imperative, even more imperative as the on-ramp solutions that are being built into the crypto space. It's one thing to get liquidity into crypto, it's another to allow people to have the ability not just to sell it from an exchange and have to wait multiple days to go to a bank account to realize it, but instead spend it directly from a physical or virtual debit card as well as from a browser extension. So this is really exciting stuff. But this is just where ZoidPay has started over the past couple years. And while they've garnered a lot of traction, they have their sights set much higher here through their new Web3 super app. Now, I have to tell you guys, as someone myself who had tried to found a crypto startup and tried to build a crypto wallet, it's a difficult task to build these types of applications. But I have to say ZoidPay has got a really good vision for the future here. And I like this concept, and I really resonate with the idea of having a super app here, not just for cryptocurrency activities, but ideally something that's going to serve as a neobank application, allowing you not only to access multiple blockchains and therefore multiple cryptocurrencies, but having instant account creation and multiple IBAN and bank accounts, allowing you to basically have multiple different types of currencies like Wise or TransferWise, as well as being able to do your day-to-day banking transactions, budgeting, etc. These are the kind of things that give ZoidPay a one leg up against traditional crypto exchanges. It can really serve as a multi-purpose application, allowing for both fiat and crypto payments, as well as budgeting and grouping and different types of things like gamification referrals that we really haven't seen that allow for applications to market much greater, but we just haven't seen really within the crypto space being utilized properly. So this gives ZoidPay the opportunity to really be a major game changer when it comes to the off-ramping and utilization of crypto in the real world. So while we have an understanding here of what ZoidPay has built, what they're looking to build here when it comes to the super app, this is really kind of the big product line here. There's also a whole range of different things coming in the pipeline. And while ZoidPay has built a lot of great applications so far, I think this super app has got a lot of weight to it compared to the prior applications, because it's not just going to allow you to send, receive, and withdraw, but on top of that, it's going to allow you to shop for goods and services, which the vast majority of crypto wallets don't really allow you to do, making them kind of separate from the physical economy and this application that lives in your phone that is a couple leapfrog steps before you can actually go use it in the real world. This time around though, ZoidPay is going to allow you to do that directly from the application. You're going to be able to earn as well when you shop, as well as through staking ZPay, which we'll talk a little bit about later on in the video. And along with that as well, you'll be able to, like a lot of traditional applications, go out there and borrow your crypto assets. So again, no need for one of these different types of applications out there. You'll be able to actually borrow through utilizing your crypto collateral. And again, this application and concept of taking out crypto credit, it works. You just basically have to provide additional collateral, right? So this is really interesting, this kind of buy now, pay later access utilizing crypto as collateral. These four things give ZoidPay a really solid advantage against the other major Web3 applications out there. And they've really been a market leader here in regards to building that Web3 off-ramp. So if you guys want to learn a little bit more about it, I highly recommend you guys dive into this article from Elena from ZoidPay, which talks a little bit about some of the upcoming features in broader detail. But I want to go ahead and talk a little bit here about ZoidPay's native token here. This is the native utility token for the platform that allows you to get not only staking benefits as you're staking the token, similar to a lot of other different types of staking protocols, you can get some kind of yield, but outside of that, it allows you to get all types of different benefits as well when you utilize the token. Not only will you receive staking rewards when you stake ZPay tokens through a variety of different types of shopping pools for major e-commerce brands or online stores, but on top of that, when you're staking through these shopping pools, depending on the consumer activity in those different types of brands, you'll get different types of additional staking benefits, such as NFTs, raffles, and a lot more that you'll get access to as you're staking within the pool. Now, while I'm not here to tell you guys that you have to stake ZPay tokens or that it's an amazing opportunity, I definitely recommend you guys do some due diligence on it. And if you guys like the products out there that ZoidPay has built, perhaps the staking might be something that you'd be interested in. Again, I recommend you guys do your own due diligence. I'll leave some key links down below in the description where you can learn more about the ZoidPay token on their website as well as the staking program. But for me, I'm much more focused on the product side. And I recently got to chat to Fareem, who put together this really nice roadmap just back yesterday when it comes to the upcoming roadmap for ZoidPay. Some of this has been worked on behind the scenes for a long period of time, and they've got some really exciting things coming up this year that is again going to keep them at the forefront of the off-ramp sector of crypto and making them one of the big infrastructure plays if they can deliver on these set goals. So I want to first go ahead and talk about what we discussed earlier, which is the super app. And they have some really great visual graphics to actually understand how this application is going to look and function. And I have to say, from one crypto founder to another crypto project, they have done a phenomenal job on the user experience. It's relatively clean and understandable how things are going to work. You obviously have your accounts tab where you might be managing different types of crypto assets or fiat currencies. You also have your card tab where you can manage and secure your card in order to make sure that there's no malicious activity. You can see the transactions and activate different types of cards, even having multiple cards from one account. And outside of this, well, you've also got tabs for your crypto applications, or more specifically your crypto wallets, for all types of different assets, whether it be big names like Bitcoin or Ethereum, as well as different types of layer 1 or layer 2 assets like Solana or Polygon. But on top of that, NFTs, being able to actually see your NFT collection from its own unique tab. These 4 tabs not only cover your cryptocurrency activities, but they cover the activities that you would utilize in a traditional neobank or fintech app. And this is the kind of quality experience that I'm kind of surprised we haven't seen come from a Coinbase or Binance over the past few years. Really having all this functionality in an easy to use mobile application that's going to allow you to spend your crypto in the real world. So huge hats off to the design team on that, and I'm really excited in Q2 to see the launch of the super app. But what's even bigger than that, and although it may not be as tangible as the application, is going to be the foothold that allows for ZoidPay to undeniably be one of the largest off-ramp players in the crypto space and potentially become a unicorn, is its B2B solutions. This is a major hole within the crypto space right now when it comes to Web3 and crypto. And that is building B2B solutions that are going to allow for all types of traditional Web2 businesses to be able to interact in the exciting world of Web3. Not only to interact with specific blockchains or metaverse or GameFi projects in the crypto space, as well as the broader DeFi industry, but on top of that, having Web3 APIs to actually allow for people to have KYC or KYB to be able to actually utilize some of ZoidPay's payment infrastructure for their different types of applications, allowing companies to receive crypto as well as being able to interact with other types of services that ZoidPay may build. This to me is very exciting because if you can build these types of applications and lock in some larger partnership opportunities for the brand, this is going to allow ZoidPay to have a major network effect that puts it among the competition. And they already have in the works a major partnership that's going to bring them to millions of different consumers across across the world that's already starting to utilize these B2B applications. So there'll be more news on that as it comes down the line. But to see this kind of business development going on already behind the scenes gets me really excited. Now, there are a couple other different projects or aspects that are going on within the ZoidPay ecosystem. These are really the two big ones for me. They're also going to be focusing on cross-chain scaling, basically having layer 2 functionality or allowing people to interact across multiple different networks. Again, this is probably pretty intuitive and understandable for you guys, allowing you to bridge assets from one ecosystem to another, interact in different types of DeFi activities. But outside of that as well, they have their focus on the Zoidverse. For me, this seems kind of like an early stage and experimental project that's going to allow you to interact in a virtual world, which they have a demo of online that you can watch, that gives you an idea of what they're trying to build, allowing you to interact potentially with a virtual e-commerce space and being able to shop for goods and services utilizing your cryptocurrencies. While again, for me, this is more of a distant concept, I think this is definitely still something quite interesting and could open up a further business line for ZoidPay in the future. Outside of that as well, they're focusing on launching Wand, which is another utility token for the ecosystem. And way to think about this is similar to Kusama and the Polkadot ecosystem. It's going to be a testing environment that's going to allow for early stage applications within the ZoidPay ecosystem to actually foster and have it happen on a separate network than the core network itself. And there's going to be all types of different things around that. But I recommend, again, you guys do your own due diligence on learning a bit more about that. The big things that are a bit more tangible are the fact that they're focusing on getting tier 1, 2, and 3 exchange listings for ZPay. And I think this is going to be totally doable with the type of business development that they have, especially their upcoming F1 partnership that they're going to have, and the range of products and service as well as utility that has been seen so far in what they've been building. I think this really puts ZoidPay not only for a busy year here going into 2023, but on top of that as well, again, puts them in the position to become one of the largest infrastructure plays going into the next bull market in crypto. There are hundreds of billions of dollars worth of assets out there and will likely become trillions of dollars during that next bull market that need to be spent and to be realized to some degree in the real world. And I think ZoidPay is building a really awesome suite of tools that can help to deliver on that vision. If you guys are interested to learn a little bit more about ZoidPay or ZPay as a token, I recommend you guys do a couple key things here. Definitely consider checking out the Twitter for ZoidPay, as well as checking out the website and their Discord where you guys can find more information. But you can get all this at the link down below in the description where you can learn more about the project itself. I'm definitely interested to see where ZoidPay goes in 2023 and beyond, and I think they're well positioned to potentially have a major impact when it comes to the infrastructure for payments in Web3. Thanks so much for tuning in, guys. As always, if you like this video, consider dropping a like and subscribe if you haven't already. But until the next video, I'll see you all in the next one. Take care, everyone.